Good afternoon.
Good afternoon, everyone.
We're right in the middle of lunchtime.
Absolutely. We'll make sure you don't fall asleep.
Yeah,
So
we
let's make it a
should
fun
promise free food here on the stage.
session. That's great. Look, today, my name is Zhang. I'm a managing director and partner at BCG, and I cover Web3 and digital assets. And we have the pleasure today to welcome Gary together with us, founder and CEO of Terminal 3. And obviously, Gary had a very successful career, both as entrepreneur and CEO. So why don't you maybe start a bit and talk a bit about yourself? What's your path today leading to enterprise blockchain?
Oh man. Okay, so I'll keep this really short. So I started off in very traditional US tech companies. So I've been through Google, AOL, all on the ad technology side, and then eventually ended up at Spotify when Spotify was still relatively small in the United States. There was about 20 employees. We had just gotten our licenses in the US. I helped build the ad tech for Spotify, and then led labs there for a number of years. That's when we were first started investing in and building with big data. It's kind of funny to think now that 10 years ago, big data was not really a consumer application technology yet. And then I joined a media technology startup called Dig. I think some people here might remember Dig.com. So I was CEO of Dig, and then somehow ended up in Hong Kong 7 years ago. Took over a very old newspaper, which is 120 years old now, called South China Morning Post, and was responsible as CEO for its transformation over 6 years. And then made my way into blockchain. And the reason I did that was because all these years in consumer technology, and a newspaper is consumer technology, I came to realize that there was a very significant paradigm shift in what a next generation of consumer expected from their interactions with and their effectively ownership and stakeholdership with enterprise brands. We saw that in the news industry, we saw that in the retail industry, and even though it might still be a few years away from scale, to me, their expectations exactly match what the decentralized internet can offer. So I became convinced of Web3 and decided to build in it. That's how I ended up in Web3.
That's amazing path, right? Seems like you are the perfect person to lead the real campaign, right, for big consumer tech company to move into Web3. So how has it been so far, right? What kind of killer use case have you seen?
I haven't seen any killer use case yet.
Wow.
I think we're really, really early in enterprise adoption of blockchain. We have effectively, in my mind, been through kind of 3 stages of this so far. The first phase of enterprise adoption of blockchain was just blockchain as ledger technology. Even though, of course, blockchain started off as, Bitcoin, it was a value hold. For enterprise adoption, their first introduction to blockchain oftentimes was like Hyperledger. It was sold to them as a more effective, more efficient type of database. Easier to build on, it was all private, you don't have to worry about security, you didn't have to worry about external hacks and whatnot. And that was their introduction. That was phase 1. Didn't quite scale, didn't quite work out because there were not enough engineering, there were not enough applications. Frankly speaking, it was actually really hard to convince an enterprise CIO why blockchain was better than all the scaled centralized data solutions that were out there. Then phase 2 was that finance came into the fold, right? The fintech application of blockchain started to scale. These protocols and platforms made it easier for people to transact across different digital products, across different borders. And there are some companies that started to adopt those fintech applications of blockchain, and that there's some interesting government applications, some interesting scaled enterprise applications. And then phase 3 has been the most recent phase, which was marketing and loyalty. That's the NFT craze, right? Everyone wanted to get in on the marketing side of Web3. They wanted to ride the hype train. A lot of projects were launched. Most of them were abandoned, right? And now we're in this lull where the enterprise applications that were planned during the bull run have all effectively launched, and fewer enterprise applications are being launched right now. I think the killer use case is still to come. And I think that there is a very, very long phase 4 that's going to happen before the killer use cases, and that phase 4 is going to be infrastructure adoption, right? And so the baseline rails and roads that allow a enterprise company to move into Web3 with ease, and this is the key thing.
Yes.
With ease, those technologies need to be built. Enterprise needs to adopt them before they can figure out what the real killer use case is.
Okay, but then how do you convince an enterprise, right? If you are like sitting as a CEO of a multi-billion company, how do you convince them that blockchain is so important that you need to invest now for something that you cannot see in the near future, right?
Okay, that's such a tough question. I'm not going to answer it yet. I want to ask you, actually, YH, before I answer this question. If you're asking me about killer use cases, you've seen a lot, too. Do you agree with me? Because you look like you disagree with me when I said that there were no killer use cases in enterprise yet.
Well, to be honest, I think, I partly agree and partly disagree, right? So the reason why I would agree is because, it depends on the definition of what you mean by killer, right? If you think a killer is 1 billion users, then I totally agree, right? So I don't think that enterprise blockchain has seen a ChatGPT moment. And you've seen AI, everybody talked about AI for so many years, right? And it became really popular with ChatGPT, right? So what's the ChatGPT of essentially blockchain is something I don't think we have agree with, right?
Well, but if we look at ChatGPT is a great example, because if we actually look at AI went through 4, 5, 6 phases before we got to the ChatGPT moment. And some of those phases were very, very similar. Started off with enterprise technologies that made recommendation engines and whatever algorithms you run in the background for consumer technology to be easier, and then that got applied. Then it went into academia, and then it went to a cross-functional adoption. And then eventually you got to the point where infrastructure made it so easy that anyone could build on top of AI tech. You no longer needed your own AI technology. You can just literally, there are APIs for this. You can use somebody else's tech and somebody else's large language models to change the utility of your own business, and then we had the ChatGPT moment, right? So I actually think AI is a great example of the patience that will be necessary before we get to that scale event for blockchain in the consumer enterprise world.
That absolutely agree. And I think, when you think about use case, we also think about, the back end and the front end, right? So for instance, if you look at the financial industry, right, essentially, the fintech revolution has actually been a front end revolution. Right? So if you have Revolut or N26 or whatever fintech app you have, on the back, it's exactly the same as a bank. Right? It doesn't change anything, but it changes the user experience. So it's more visible for the consumer, right?
Do you think that the speed of settlement that exists in fintech, which is part of their value proposition, and especially now in blockchain-powered fintech, the speed of settlement, do you think that's still just front-end? Isn't that a very significant back-end shift that makes blockchain applications in the financial services world so much more compelling, not only for banks, but especially for consumers?
I tend to agree. I think it makes a difference. But when you think about what really creates adoption is not a 20% difference. It's a 10 times difference, right? So if I use a consumer fintech, right, and I basically transfer money, you can actually still settle in a very lousy manner on the back end. But on the front end, your screen will change and you will move from $100 to $50 because I transfer you $50. And the front end can be seamless and the back end reconcile and messy in the back, right? But the consumer doesn't realize how messy and how costly it is on the back, right? So essentially, I think, I tend to agree it creates a difference, right? But is it really noticeable from a consumer point of view? That's TBD, right?
Okay.
And it's the same for the AI, right? So I think, you make a very good point. In the beginning, you still have a lot of AI application in research, in customization, etc. But that's not the consumer can see, right? So whether you receive recommendation driven by AI on TikTok, do you know it's really AI? I don't, personally. I just see video flipping by, right? If I see search engine result which is customized, do you think it's AI? I don't, right? But when I see ChatGPT, wow, I feel like it's AI, right? And probably the math and the algorithm behind it is the same, right? But the fact that consumer experience is different drive the whole hype and adoption, right?
So then back to the question that you asked previously. How do you convince a corporate executive to invest and start building in this technology that might still be years away from consumer scale, years away from the ChatGPT moment? Probably not that far away, but not immediate. I think you have to convince them that there are obviously these corporate advantages that come before consumer scale. So one of the things that we've seen when it comes to the efficiency of ledger technology versus centralized databases is that marketing and targeting, when you use decentralized ledgers properly, becomes the iteration cycle of marketing and targeting becomes significantly faster. Okay? So as an example, a great corporate enterprise use case that for whatever reason is rarely talked about is that there are major airlines around the world, including, both of us live in Hong Kong, and the Hong Kong airline, Cathay Pacific, that I think most people know very well, have for years been using blockchain technology as part of their CRM stack. They have no decentralized loyalty program, not like Starbucks or Lufthansa now, but they have their customer information, part of it, sitting in blockchain technologies. Now, the question is why? The reason is because their CTOs, years ago, figured out that targeting using customer information off of blockchain technologies to run targeting and marketing campaigns means that the settlement of those mileage points, even though the mileage points are still centralized, the settlement of those mileage points is significantly faster and less manual, because there is a single universal ledger that all of the marketing campaigns can actually refer to. That didn't exist before blockchain technologies for them. So there's a corporate efficiency case for blockchain adoption. Increasingly, there are going to be security reasons why companies should be moving to blockchain technologies versus the existing centralized technology stacks they use today. There are going to be regulatory and compliance issues why corporates are also going to move. So they're going to be cost savings first before the revenue opportunities. That's my interpretation of the phasing, right? So to convince CIOs and CTOs to invest in blockchain today, I think the easiest way to sell them into, now that we've passed the kind of the CMO NFT craze, is cost savings first, and then the revenue opportunities with consumer scale will come later.
I very much agree, and I actually very much like your framework on, what's the short term, right? What do you do to fund the journey, and how do you basically convince on the big picture? And somehow I agree that the first phase should always be cost saving, right? But the problem with the first phase with the CIO is that blockchain technology is competing against other technology for the same effect, right? And you can argue that it can do slightly better or slightly worse, right? But it's not an absolute win, right? You need to fight for your fair share of the market. I think that's one. The second thing, which is even higher at the board level, chairman level, or CEO agenda, the reason why for some industry you need to adopt is for optional value, right? Because some industry, I think, will just be like marketing and loyalty. But if you don't have a loyalty program, does it kill the business? Essentially, not really, right? You can live, with worse marketing, you spend a bit less money, right? But essentially, for some industries, such as the financial service space, the technology really has disruptive potential, right? And those are regulated entities where changes of landscape happens every 10 years. Right? And if you are like a second-tier player, that's the only way you catch up with the number one player, right? You have one chance every 10 years. At the same time, if you are leading players, that's how you become an underdog, right? You can lose everything in the span of like 10 years, right? If essentially the technology doesn't follow. So how do you basically protect yourself against that? How do you hedge that? How do you make sure that you are not disrupted? It's actually by investing in that technology. Because if you don't do that, and regulatory clarity comes, and everyone starts to do that, then you might fall behind very, very big time. So I think there is a bit of like cost-saving effect, right, which is immediate benefits, but there is also a bit of like optional value or insurance value if you're a large player.
There's a lot of corporate and enterprise education that needs to happen before any enterprise players actually understand that adopting these two technologies is going to hedge for the future. I mean, you guys as a consulting firm spend a lot of time in education first, I assume, right? I find that we haven't actually had the inflection point where enterprise executives are, well, they're certainly not informed yet, but they're not even willing to be informed yet. I don't know when that inflection point comes. I think that this is where, it's very odd, right? In this technology, we often talk about enterprise adoption of new technologies and ask the question of whether or not first movers are better off or fast followers are better off. The vast majority of the time, I would say, for enterprise adoption of technologies, the fast followers are better off. That's what I would generally say. Okay? Because the first movers make all of the mistakes. They deal with a really, really bad infrastructure that is not mature yet. They're the ones who actually pay into the pot, and then the fast followers take from the pot. But I actually think that in this case, for blockchain adoption, first movers are going to have a significantly greater advantage. There are a couple of reasons for that. Number one is that they get to set the standards. This is a technology where the playbook is not written at all. And standard setting is going to be incredibly important. And standard setting, by the way, includes regulation. And it's the first movers who get to decide on regulation. And so if the big players decide to step into the fold, right? Let's take banks as an example. If the world's largest banks are active with regulators today, they actually have the pull to define how security regulators, how commodities regulators around the world understand digital assets. And they can actually, I think, maneuver regulation today to benefit major players who have first mover advantage versus the fast followers. They define the rules. The second reason is because the nature of the decentralized internet is that the more decentralized a digital asset is, the more wallets have that asset in it, the more powerful that asset becomes. And so as a first mover, the longer you're in the game, the more likely you're going to be decentralized, the more likely you're going to be in many, many wallets, especially with the whales, the people who really have the moving power for technology. And therefore, you're going to beat out the actual fast followers. Right? And then the third reason I actually think is that there is a credibility issue in our industry. And today, that credibility issue is combated by a few things. One of it is longevity. I know it's silly. We have an industry that is only a couple years old. But if you're a project that's been around for more than 18 months, it already shows it lends credibility to who you are, to what you're doing, that you continue to invest in it. So for those three reasons, I actually think for enterprises, first mover matters in blockchain adoption and in decentralized technology. And I would recommend for CTOs and CIOs to act fast, even if it's small scale projects, to act fast rather than wait and see.
I tend to agree, right? So I think, it's, I would even say, it's all about building your muscle, right? So essentially, if you build a muscle before the big battle, you will be fit for combat, right? When it really comes and when competition starts to do it at the same time, right? And it comes back to essentially, what's the optional value of having that, right? Because what happens in the worst case scenario, if you don't have that, for some industries, nothing will happen. It's going to be nice to have, right? But for others, and we're talking about some financial services, I think it's going to be totally disruptive. It's going to be, we can argue advertisement is probably also one of them, right? Where the current industry is under huge pressure, and there will be reshaping of the value chain, right? In some shape or form, enabled by technology, right? And the way it will happen, right, will actually be having a huge impact on your own industries. Right? So I think, investing in it totally makes sense, right? But I don't think it's only about education, and I don't think it's only about technology, right? Because the first question that people will ask is, what do I do with that technology, right? So I think painting the picture of what will happen if I don't invest or I do nothing is really, really important to understand actually the optional value of investing in that technology, right?
I might piss off a lot of people here. I actually think that one of the major missed opportunities in our industry was the death of Facebook's Libra project, Diem. I actually think that if I already see people frowning in the crowd, I'm making friends.
Grunging.
But I actually think that had that actually happened, whether or not we agree with the centralization of Meta, but if that had happened, there would have been the kind of critical mass understanding and adoption of what borderless actual digital currency could mean in daily consumer lives. And because of that, the enterprise adoption would have been so fast that suddenly billions of Facebook users all had the opportunity to own and then therefore spend digital currencies. I think the adoption would have been, the enterprise level adoption would have been so fast, it would have accelerated the actual decentralization of our world. Even if DM itself was heavily centralized, it would have spurred the move towards decentralization. If there is a ChatGPT moment, it might, in our world, be that. It might be the thing that, for obviously maxis, for people who really care about decentralization, may find kind of vomit-inducing, but it will be the thing that will accelerate the actual enterprise-level adoption to get to greater decentralization. So this is also the reason why I think we have to pay really close attention to what PayPal is doing today, right? With PayPal's stablecoin. Being able to turn on that many wallets, the PayPal accounts, to effectively become digital asset wallets and have the rails that already exist, that people are already familiar with, that people already trust, to become onboarding rails into a digital asset world as a gate into the fully decentralized world, is going to give us so many more advantages that I think most of us who are builders are willing to admit today. So yeah, this is me just circling back to the ChatGPT moment. An inconvenient opinion I think I have is that it's going to come from a heavily centralized entity that actually opens the door to digital assets first before we get to decentralized assets.
I agree. And I think, look, when I think about it, there is two elements to mass adoption that you need, right? So one is how to onboard users, which today, to be honest, if my grandma had to basically buy an NFT, she would have to go to an exchange, put money, do KYC, transfer to a wallet, and then get into a smart contract on OpenSea, which obviously she is, might not be able to do it by herself. But with PayPal, as you mentioned, right, that could be an option. I think now that's one element and one of the missing pieces, how to onboard 1 billion users. But the second thing, which I think is even more important, is having a really, really differentiated / white space use case, right? What do I mean by that? Is, having a ChatGPT moment is because it's something that you have never seen before, right? If it was just Siri, which was powered by the same algorithm, you would not be as excited, right? This is the reason why I believe if the use case is still like payment, yes, for sure, it's cheaper. Yes, it's more effective. Yes, it has no restriction, you don't have to pay interchange, it's faster. But is it really a 10-time difference? Obviously, you can do it with a traditional system, right? So you really need to find a way where the use case need to be white space, need to be something which is non-existent today. And this is actually how you basically unlock the new wave of users, right?
Ooh, I got to think a little bit about that. I think we're so far into just technology adoption. I have a hard time finding true white space. It's much easier to say, okay, here's X example of consumer behavior that exists in Web 2. Let's create a decentralized version of it that adds additional value. So white space is an interesting question. I actually don't know how to answer that. But I will say that I think that there is a difference between a 10x use case and kind of a killer use case that accelerates adoption. Those two things to me are different. And I'll give two examples of I'll give an example each of what I think a killer use case in Web3 really is for consumers versus a 10x use case. I think a killer use case is pretty commodity. It's a pretty commodity use case. I think it's ownership of a certain digital asset that people care about. And so eventually I think a killer use case, killer use case is it's sort of that adoption moment, is going to be some digital asset, some Pokemon moment where there is going to be a generation of kids who all want that one digital asset, who during Christmas and birthdays for a 24-month cycle say, that's the thing I want my parents to buy. And I think we're close to that. I think that there's going to have to be a front end, a company, and well, I'm talking about an IP company, a well-known IP company, whether it is a Nintendo or a Disney or something like that, who decides, I'm willing to kill my golden goose of the traditional business that I sell right now in IP and make a massive shift into digital asset, launch something that everyone wants, and all the kids decide to tell their parents, I want to buy it. I think that that is a pivotal watershed moment. But I don't think that's a 10x use case, because that is just a replication of the existing collectible use case, right, ownership use case, but in digital assets. I think a 10x use case that we've already started to see today is loyalty. And when one of the major loyalty programs in the world, Marriott Bonvoy as an example, okay, decides I am willing to shift my loyalty points into a decentralized world, and the big thing they have to get over is the fact that I can no longer control the actual rewards points. I can't just devalue my rewards points whenever I want. I can't control the secondary market trade of those rewards points. But they figure out a way to make it so that because they give up control, their rewards points become more valuable, because more people can suddenly adopt it as their native rewards point as consumers and as enterprises. I think that's going to be the 10x moment. That's a 10x use case. When we start to earn assets by basic behavior, and those assets have reward value, not only as holding value, but as transactional redemption value, and it can be almost universal. That's a 10x use case for the decentralized economy. So to me, those two things are a little bit different, sort of the adoption use case versus the 10x use case. I don't know if that makes any sense.
I think that makes sense. And I think I can relate to the second point on the 10x use case, right? So basically creating more fungibility and utility of your point, right? Totally agree. The only point I would arguably challenge is Marriott really going to do that, right? Because you can argue that you basically have two types of players in the loyalty program, right? Either you are like Marriott or Asia Miles in Hong Kong, and you already have somehow high spender, a lot of customer behavior, and somehow monopoly, right? So your incentive to change and your pain point is not that high. Where I would see actually the value coming is, from the second tier loyalty players. Those are the guys where I'm sure you have like coffee points, second tier hotel chains or second tier airlines that you don't use. Those are the people who actually have points in the wallet, but 80% of them don't use it, right? Because they have no utility, it's not compatible with other programs. This is where actually the technology can allow intercompatibility and switching across, right? So if you are a second tier hotel chain and you are not Marriott, this is your only chance to have a competitive loyalty program to at least compete against Marriott. Whereas actually someone like Marriott would almost always lose, except if the point value increase, which is actually hard to guarantee, right? So I totally agree with the use case. I would probably see the adoption coming bottom up versus top down.
Yeah, I think I would agree with you on that I'm using Marriott as an example because it's one of the largest loyalty programs in the world, and it really would be a world-changing moment if they made that call. I agree with you, it's very, very unlikely. I mean, Marriott, frankly, they are a product. Well, actually, I shouldn't just crap on Marriott because all major loyalty programs are like this.
We love Marriott.
Yeah, especially you as a consultant. They're a product that is masquerading as a platform. But really, for there to be that world shift, you actually have to think about loyalty program as a protocol. And so you are right. You're probably right. I mean, yeah, you're smarter than me, so I'll say that you're right. That the
very polite way.
The second tier programs are going to be the ones that are going to willing to make that sea change bet and become a protocol. Yeah.
That's right. Look, I think we had a very, very good discussion.
I think we went off topic. I've actually no idea.
Yeah, we went off topic. Any last advice, actually, for any enterprise in the room who want to adopt the technology, right? We talked a lot about it, right? But one single advice, what should they take away today?
When you think about decentralized technologies, don't just think about it as actually consumer technology that fits the use case for a next generation of consumer. That, I think, is the way to convince corporate executives on why it's important to adopt this tech. It's not just for the tech itself. It's the fact that the next generation, Gen Z, have a completely new set of behaviors that we have never, ever seen before. And we don't pay anywhere near enough attention to that set of behaviors today. Once you start paying attention to it, you'll start realizing that what they believe identity to be is nothing like any generation before. What they think asset ownership looks like is nothing like any generation before. And then what they think their relationship with brands ought to be, which is not as a customer but as a stakeholder, is nothing like anything we've dealt with before. So before you even look at the technology, if you are able to actually study Gen Z and realize that their behaviors, the way that they make consumer decisions is completely different, you'll start to see the value of decentralized technologies and why that is going to be necessary for you to be relevant for that next generation.
Very wise word. Thank you very much, Gary, to be with us today.
Appreciate it. Thank you.